May profits be upon you. Welcome to another weekly Forex forecast. Today is September the 7th, Sunday, and we're looking at the US dollar index, or otherwise known as the Dixie. Let's take a look at the economic calendar first for the week ahead. Monday and Tuesday, we had no red folders. That means there's no news drivers. All right. And without news drivers, the market lacks volume and liquidity to move in an efficient manner. And you just got to watch. You just got to be careful when you're trading in those kind of environments because your setups are less probable. Okay. Wednesday, Thursday, Wednesday we have core PPI, but Thursday is the day that we should be watching because that's the one that the Fed is watching. The core CPI, the Consumer Price Index. Uh, uh, the Fed is looking at these numbers to determine if they're going to raise or lower the interest rate. And right now, the market has priced in a certain interest rate hike in the very next meeting for 25 basis points. But because of the low numbers that the NFP, the non-farm payroll, turned in last Friday, the markets is already pricing in another 25 basis point cut for the following meeting after the, the, the next one. So we have to be extra, extra careful. All right. Core CPI has high impact potential. It could reverse the market. So be extra careful trading on this day. I like to get my trades in before the news, up Monday, Tuesday, Wednesday, Thursday, and Monday, Tuesday, Wednesday. Thursday, I like to be flat until the news, and then I like to get in the market once the news has been announced and we can see what the market is doing as far as the direction and the bias. All right. And Friday, we have GDP, another good news driver. So uh, that is the week ahead. Anyway, we're looking at the monthly time frame on the Dixie. Hey, let me know in the comment section if you're having trouble with Dixie, your Dixie chart, because right now I'm showing ICS, right? And I trade on, you can see when I float over this Dixie, it says, come on, man. What is it doing here? It's not even showing it. That's interesting. There it goes. It says TVC. I'm clicking on it, but yet ICS is showing up. I don't understand what's going on here. All right. And I've tried three 18-minute videos that disappeared as soon as I hit continue to publishing for the Dixie TVC. So I'm trying it on ICS. Hopefully it goes through anyway. Let's go. Anyway, I want to show you that on the higher time frame, what we're showing is an uptrend. Right? This is the monthly time frame. Each candle is a month. We may go high. We made a higher high, breaking structure here. All right. We make a higher low here, a new higher high, breaking this high, breaking that structure, and then we come back down for a potential higher low. All right. This is a potential higher low, but we are in an ascending channel, and this is the support line of that ascending channel. All right. I don't trade channels. I don't trade trend lines, but I do use them to mark structure. All right. Now, uh, that is one interesting point for a bullish market. But we have been bearish for months. Let's take a closer look at this. All right, we've been bearish for months, and you can see the only bullish month that we had was the month of July. We've been bearish, and then the market created this candle here, and you can see that we took out the high and low of the previous monthly candle. That is a very bullish indication. We created the swing low here and broke that high here, broke that structure there, and it ultimately went this high with August's high. Because we closed higher than the previous month, the we can safely say that we're probably going to trade towards the high of this month with the next candle. That's exactly what we did here. All right, so this is the range we're dealing with. All right, now August was a bearish month, but it closed as price is retracing back into the range of July. Got it? And I want you to see with the Fibonacci retracement tool from this low to this high, and we move it over to the left, we can see that the market retraced back to 705 on the Fibonacci retracement tool. All right. The deal is between 618, the golden ratio, and 786, the last Fibonacci retracement, before we think that the price is probably it's highly probable probably is going to that price is going to trade towards that low. This is OTE levels, optimal trade entry, and that is what ICT teaches us is the area that price will likely find support for higher prices. Okay, so we have a confluence of support here. The support line of the ascending channel here, and the retracement to this Fibonacci level here. Now, I want to show you something else. Because price is fractal, and what we see happening on the lower time frames, we'll see happening on the higher time frames. And I'm about to show you what I mean by that. Look at this channel, right? What we can see here is price made a new high, so we have a new range of price, right? And if we put the Fibonacci retracement tool on the low to the high, stretch it over to the right, so we see that price made a higher high, breaking structure to the upside and pulling back here for the potential higher low at the 705 Fibonacci retracement, in between, smack dab in the middle of the OTE levels that I just pointed out with that the July and August candles. Okay, it's fractal, baby. It's fractal. All right. If we go down to the weekly time frame, that's the daily. If we go down to the weekly time frame, I want to show you something extra special. I'm gonna make an argument to say that we're bullish, even though it's quite obvious we are bearish. We have been bearish for months. All right. Price has this little blip, and then we resume that bearish momentum. All right. Yeah, we're bearish, but the reason why we're bearish is because we're in a retracement. And if you see an uptrend, you're going to see an impulse, a correction, impulse, correction, impulse. Each one of these corrections is a retracement, and we're retracing back to what? 50% or 618, 718, 705, or 786, and then we break structure. We pull back. All right, this is a retracement back to what? The same levels, and then we go up. But that is the higher high, higher low, higher high, higher high dynamic. All right, so it seems like we're in a retracement on any given time frame. You have to think, what is the higher time frame overall trend? Why are we looking like we're in on this looking like on this time frame? Are we looking to be in a downtrend? Why are we in a downtrend? Are we downtrending just to make the higher low in a higher time frame uptrend? That is the question. That's always the question. All right, so I want you to see this. Look, you see price we come in hot, making the low, lower high, lower low. This is the swing low. All right, what do? Price starts to move up from there. We create that low, and then we push up, and then we come in right back. And that low is what I want you to pay close attention to. That low right there. What is that? That is a liquidity low. What is my idea? My idea is this is the low that will spring that has the problem will likely the likelihood price will find support after taking this external low and moving higher. That's it. All right. And all the while, the swing low stays protected. That is a protected low. Why is it protected? Well, because it's a swing low. It's the low that came in contact with the it's the lowest point of this last bearish leg down. All right, and as I showed you, and if we look at it, price is been moving sideways. We haven't pushed past this what I think is the potential CISD, the change in the state of delivery. That will confirm that this is a protected low for me. All right, once we get past this high, this is the last bearish leg. I'm looking for price to close above that bearish leg, that the high that made that low, and signal that price is going to continue higher. But I think we're going to have to take out this swing low. I mean, this liquidity low. This is actually an intermediate swing low. We have an intermediate swing low on either side of the actual major swing low here. You understand? So I'm looking for a price to take out this liquidity low and then continue high. Why would I even think that? Let's go down to the last time the market touched this support line of the ascending channel. All right, you can see it. You can see it very clearly. Price made the low, lower high, lower low. We have the last bearish leg. All right, we have the swing low. Price moves up, creates that swing, that liquidity low, pushes higher, comes back to it, sweeps it, and price never looks back. All the way up. All the while protecting that swing low. It never closes past that swing low. Got it? Does that make sense? And you might say, oh, well, that doesn't mean it's going to repeat. You're right. But the possibility is there just because there's a precedent made. Let's go back down to the first time it touched. Ooh, interesting. Look at this. Price comes down, make the low, low, high, low, low. We have that last bearish leg. Price moves up, creates this low, a liquidity low, moves higher, comes back to it, sweeps that liquidity low, and price never looks back. All the while protecting that swing low, never closing below it. Do I have a good case? Did I present a good case? Yes or no? Let me know in the comment section if you agree or disagree. I would love to hear what you have to say about that. Now, on the daily. Let's take a close look at this and then we'll finish. We'll wrap this video up. Thank you for staying this long and staying this patient. I appreciate the fact that you appreciate it. All right. All right. I want to point out that there's a couple of scenarios that are playing out here. One, this is the daily change in the state of delivery here. All right. Price was bearish up until this point. Sweep that low. This is our last manipulation leg, and then we start moving up higher, 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 low, higher, high. We traded above that CISD, that change in state of delivery. This is the correction to this impulsive move up. All right. So we are still in correction territory. I've been saying that for the last couple of weeks. There is this. This is a demand zone, or let's say an order block that pushed higher. You can see how price left it with this level with this fair value gap. This is what you want to see with an order block. I've been wanting to see price contact this order block. We didn't see it here. We didn't see it here. We didn't see it here. 2 weeks ago, I said, I can't wait to see what happens when price reaches it. Well, Friday, we reached it right there. Got it? And now I want to see the reaction. I said I wanted to see the reaction of price when it reaches that. And we are there now. We're going to see that reaction this week. What I want to see is two things, either of two things. One, that the demand is here. You can see it clearly here. I'm thinking there's plenty of buyers waiting. Price did react here. I want to see if we get some follow through. And with that follow through, that would mean there's the possibility that there's going to be a bearish fair value gap forming on Monday or Tuesday. Well, at least Monday. And I want to see if this daily fair value gap holds. If it does hold and sends price down, then we're going to see that scenario play out that I'm looking at right here with that liquidity low here. Is this a protected low? Because it did break structure here, and it took out the CISD here, right? Trading above it, and then we had a quick turn there, a quick turn for the correction. All of this is correction. We've been in there for weeks. So I'm looking for price to sweep like it did. It swept all of these lows. Got it? Swept all those lows into this order block here. And I'm looking for price to continue higher. Either from here, it does something like this. All right, where this daily bearish fair value gap fails, or it holds and sends price down here for it to turn around. That's the two scenarios that I'm looking for. Now, should all things fail, should those things fail, the support in place for higher price, should that fail and price comes down to the protected low and it does not hold, then I'm looking for price to close past this low. I want to see a candle body close. I want to see price move back up to the support line of this ascending channel and turn to resistance and send price down. That's when I will change my my bias on the US dollar and I'll start shorting against it. Okay? So those are the scenarios. I hope you enjoyed this video. I hope you enjoyed the breakdown of why I think there is a good chance, because we're still in correction territory, that I think price will ultimately head higher, either from current levels or after the support, the liquidity low is taken out. I think there's a high probability chance that we see higher prices in this vicinity. Okay, I'll see you in the next video. Hey, the next video is going to be Euro USD, and I will see you there. Don't miss it. May profits be upon you.